Not at all, not at all. I think it's strengthened it. Maybe we could possibly get 100K this year, because of this crisis. I think a lot of confidence will be lost in the dollar, and man, that is going to be a scary ride.
Crypto family, welcome back to the channel. Aaron here from the Bitcoin Bros, and as you guys can see right here, we have a bank, Standard Chartered Bank. They're calling for a Bitcoin price of 100K by the year's end. We're going to be checking out this article, why they think this is going to happen. We're also going to be looking at some recent crypto and Bitcoin news, what's coming next, addressing some FUD in the market, so make sure to stay tuned. But as you can see, this article, they're talking about 100K Bitcoin this year, and this is a bank in the US, and they're saying crypto winter is finally over. And they're predicting that Bitcoin will hit 100,000 this year. And the reason why they're saying this is because they are noting that one of the drivers to the price to hit 100K will be the Federal Reserve easing up on its tightening cycle, potentially pausing, potentially even cutting rates. And they think that risk assets will perform great here in Q4 this year. And they think that right along with the risk assets in the NASDAQ, a lot of the tech stocks, I think Bitcoin will rise right along with that. And they're also predicting that the Bitcoin dominance will go upwards to 50 to 60% because of some of the SEC regulations. And right now we're at a dominance rate of around 47%. And they expect that to rise later this year. And if we check out the CPI, this is what the Federal Reserve uses to determine if they're going to raise rates or not. We just had year over year 4% inflation rates that just came out for the month of June. And you can actually see that inflation peaked back here. We had this runaway inflation. It peaked back here in June of 2022. And we just had our May reading right here. And we're 4% year over year from May of 2023 to May of 2022. So it's going to be interesting to see what happens in June, how far it falls down from that 4% level, if we can get close to 3%, potentially even 2%, potentially even seeing month over month deflation. That would be good for risk assets. And there are a lot of macro traders out there saying right now that the inflation is going to level off and we'll start to see deflation potentially at the end of the year. We've even seen Elon Musk come out and say, hey, we're going to be seeing deflation at the end of this year if the Federal Reserve doesn't cut interest rates. So it's going to be interesting to see how inflation plays out. It has tapered off here a bit. It's not rising as fast as it was back here in 2022, but we'll see what happens with that. And if inflation does start to go down even faster, Bitcoin and risk assets could definitely have some price gains. And this is something also to pay attention to. This is the Bitcoin balance on exchanges. This is the first halving cycle where we're seeing the Bitcoin balance on exchanges continue to drop. Minus 641 Bitcoin off of exchanges every single day. And before that, we were seeing a lot of Bitcoin coming to the exchanges. The second epoch was 768 Bitcoin a day. The third epoch was 1,400 Bitcoin a day. And ever since that May 2020 halving, we've been losing BTC on exchanges. Imagine when we have this next halving next year and the miners cannot get as much BTC, that supply that gets released every single day, the reward gets cut in half. So it's going to make it even harder for these exchanges to accumulate Bitcoin as people start to learn more about BTC, putting it in cold storage, getting more hodlers. We're going to see the amount of Bitcoin on exchanges continue to plummet. Along with that, the Bitcoin hash rate is at all-time highs. We're seeing miners come on the network and continue to improve this hash rate, continue to secure the network. And normally we see the price follow hash rate. Right now, we're not really seeing the price follow the hash rate as the price has been dropping here recently, but the hash rate continues to go up. Normally, price does follow hash rate. That's something to pay attention to in the future if we'll see Bitcoin's price rebound and follow that hash rate. So we're going to talk a little bit about the government here. This is from Will Clementa. He says, call me a conspiracy theorist, but the older I get, the more I think politics, headlines, and world events are orchestrated to keep the population divided and oblivious to the invisible theft of inflation, from central banks that has driven wealth inequality and keep elites in power. And this is actually something that the Bitcoin bros would agree with. If you look at what inflation has done to the United States and countries all over the world, it's created a huge wealth gap. Since the dollar has come off the gold standard, people who own assets have won. Real estate, gold, stocks, cryptocurrency in the past decade, like Bitcoin, those are the people who are winning. And the more leverage you have in a lot of these systems, the more money you'll be able to make. If you were able to leverage a lot of real estate back in the 1980s and hold it until today, you will probably be a multimillionaire versus somebody who just saved their money in their bank account, because that money they saved in their bank account has lost a lot of its value. And this is something that's a problem. I mean, people aren't opting into owning assets like Bitcoin, and we're going to continue to see this huge wealth divide as inflation gets worse and worse. And as the numbers get bigger, we're just going to continue to see that dollar devalue and asset prices hit historical levels. And when they say you'll own nothing and be happy, that will be very true. We could see that within the next 10 to 15 years, where the average person cannot even afford to buy the average home in the United States. And it's going to be even worse in countries around the world. And then to talk a little bit about the actions of the SEC versus crypto. The SEC is killing crypto so they can control crypto. This is what they're trying to do. They're going to cut the on and off ramps to starve the ecosystem of liquidity. Why they're attacking Binance, why they're attacking Coinbase, create a dubious regulatory environment to deter new startups from entering the space. There isn't clear guidance for new companies, for businesses that are crypto companies, how they can regulate themselves, own assets in crypto, and also sell them like with Coinbase. They're very confused on how they can do that. Purposely deny regulatory licenses to crypto businesses and take legal action against them. Pave the way for TradeFi institutions to take over the space by granting them the appropriate approvals. BlackRock just filed their Bitcoin ETF, which is huge news. People have been waiting for that Bitcoin ETF to get approved. But if the SEC does approve this Bitcoin ETF, it definitely makes sense that they want the traditional finance companies to win in this game of crypto. And then to address some FUD, I'm going to give you guys my thoughts on all this Tether FUD that's been going on here. Is Tether USDT the next target of the SEC? So there's been a lot of talk about Tether over the past 5 years, people saying they're a fraud of a company. And now we're starting to see the SEC is going to target Tether, as we've seen USDC and BUSD, which is Binance's stablecoin. The liquidity in those has started to sell off, and people are thinking that the SEC is targeting these stablecoins now, and they're trying to dump them before something happens. So I think it would actually be stupid for the SEC to target Tether or any of these other stablecoins, because the crypto market right now is denominated in the US dollar. And you have all this liquidity, all this money circulating in all of these cryptos, and it's basically denominated in all these stable coins, which actually gives value to the US dollar. So why would you want to crack down on something like USDT? So something like the yuan could come in and become that digital stable coin in the crypto space. I don't think that they're going to attack them, but if they do, we could definitely see Tether sell off big. And then also people were saying, well, if Tether falls, will Bitcoin fall? And we've seen this here in the past where Tether, they are actually putting 15% of their profits in Bitcoin. They're holding it as a reserve asset. So people are saying, well, if the SEC targets Tether and Tether collapses, it's going to hurt Bitcoin. I think initially, yeah, you'll definitely see the price of BTC come down, but you got to think about it. People who are holding Tether, if the SEC does come after them, and you're somebody that's outside of the United States, you're a millionaire or a potential billionaire, and you have a lot of your wealth tied up in USDT, where are you going to put that money at? I think you're going to put it in something like Bitcoin that has been deemed a commodity in the United States, so you know at least your wealth is protected there, and you don't have to worry about any SEC, CFTC lawsuits coming after Bitcoin. That's just my thoughts on it. You guys can leave your thoughts on the Tether stuff in the comment section below. I'd definitely love to hear your guys' thoughts on it. There's been a lot of talk about the stablecoins here over the past couple of months, especially over the past week since the SEC has came out and attacked Coinbase and Binance. And I wanted to share this clip with you guys. It's Bitcoin Lightning Network. You can actually get a ring and use your Bitcoin through your ring on your finger. It's actually really cool. So I want you guys to check it out, but make sure to like this video if you found any value. Leave your thoughts in the comment section below. Let's go ahead and check out the clip.
Now I want to show you my newest toy. It's a bolt ring. I got it at BTC Prague. You can use it to pay with Bitcoin, with Lightning Bitcoin exactly. And the great thing is you load it in an LNbits account, and then you can basically pay and you can be offline. So I can be offline. If I assume a coffee shop is using the Breeze POS system and I want to pay for a coffee. So I get an invoice. The coffee shop has to be online, of course, but I don't. I can just take the ring and I can pay via NFC, and it's done. And all that with that little ring.